Good morning. Hope everyone's having a great long weekend. It's JJ here at Micro E Futures. Want to kind of expand. I did a video yesterday showing how to analyze liquidations, and I always use ES, but it feels like I've been leaving out the enfant terrible, the NASDAQ. And there are those who trade NASDAQ. Now, I don't because I just don't like the drama. I love ES and I know it inside and out. I'm learning every day more and more about ES after 12 years. So I just like to focus on one market, but we have lots of traders in our room at Micro Futures who do trade NASDAQ. So this is for them and for you who do like to trade it. Now, what I'm doing is I'm looking at the dynamics of a liquidation when we came up to this 19,700 level in this thing. And you had to move up, right? And we're going to just talk about this liquidation here, right? How to trade this. And we're going to show you the mechanics of the liquidation. And then we're going to zero in what we call the look below and fail trade after a liquidation. Now, there's two trades here that we can look at. One is that if you notice here on the half-hour candle wax, you can see that there's a constant seller here. Before you hit this level, and this is how I use my levels, you see there's been a seller in this constantly here, here, and here. Now, as a candle trader, you guys have a lot of technical analysis, and that's all beautiful. There's some simple things that you can do when you're looking at a candle chart that can really give you some sort of perspective that's real, that's telling you what's going on in the business. So when the market gets back up to that level, you want to see if those sellers are engaging again on whatever time frame you're using. And you see they're all engaging at that level. So the trade there would be to short that level, right? And put your stop above it, right? Now, this thing is a bit of it's a wild child, and I understand that. And you have to use larger stops and you have to use larger accounts. And it's not a trade for amateur traders. Okay. This is a trade for people who know how to manage risk. They know how to manage their position with size. So what they're doing is they're shorting that level, right? And putting their stop above it, right? So that level is at 16,009, no, 19,691. And this actual level here is 19,700 and a half. Okay. So let me just take that, put that up here. Okay. And we've got our sellers who are selling before that level around 19,691. So you're going to have to use a larger stop, put your stop above that. So you don't have to, if these groups of sellers disappear, right? If they vanish, right? Or if they see, and the only reason they're going to vanish is because they see buyers who are willing to pay over. So they'll move their offers up. Yeah, that's just business. All right. So you take that short and then you use the lower levels to cover. Now, as the market sells off, right, here's the volume. You can see that the trapped long volume is up here, right, between 19,560 and the top of that level. Now, let's just drag this out. There's the liquidation down to that red candle, the bottom candle. Now, this is the trade I'm talking about for long. So say you miss this short. Okay, it happens, right? Say you miss the short and you were looking for a long. Well, this is our original balance level. So we've got a beautiful look below and fail because what happens is there's only a percentage of these traders who sell out. It's called buying retention. It's a concept that nobody ever talks about. But what is the percentage of people who are long above 19,560 who hold, right, versus liquidate? How many of those people will come in and buy and add to that position? There's some big money in these markets. Okay. Don't kid yourself. So that look below and fail tells you that the sellers don't need to sell underneath 19,342. So it's time to get long, right? And then you can see as the market trades out, you can see that back and forth motion here is taking these sellers, right? The people who are trapped, right? They're getting them out, right? It's like beating a carpet and take a carpet outside and you beat all the dirt out of it, right? In this case, it's just trapped longs. And then the market comes right back up to the top of balance at 19,485. So if you're a longer term trader, you can take that. Now, this is a half-hour chart. So you can take that trade. And if you're holding it for a half an hour, once it gets up to 19,413, you can sell, right? That's a big move. That's a huge move. A lot of traders would give their, pinky for that move. Now, if it accepts over the middle of the range, your target is going to be the top of the range. Notice that it doesn't get there until much later on. The reason is there's still sellers coming in, right? So every time the market sees a seller, it goes down, flushes them out. Goes up, oh, there's a seller, time to take them out. Oh, goes up. Finally, it gets there. So if you don't want to hold it for this entire length of time, that's cool, right? You can take your long here, you put your stop under the green candle, and then you sell as the market comes up. You can sell some here, you can sell some before the middle, right? And you manage your expectations with how the business is actually working, not some pie in the sky indicator, right? So it's actual business transactions, and you'll see as you drag that market volume across, you can see the position. And now as we get back above this level, right? Once we get back over here, because I stopped it at this green candle, you can see the position underneath us now. And we're going to go and we're going to sell it up here because this is the path of inventory, right? So down, flush, clean up, back up to resell, just like a used car lot. Then when we run into sellers here, right, where we expect some, back down, down, but it just flushes the middle and comes back up. That's another nice trade. Look below and fail of 19,413, target 19,485. Not a bad trade. And for those of you who want to hold it to the next level, 19,560, right? And then up to there. These are beautiful trades for longer term traders with larger accounts, right? And now let's go take a look at that trade here, and you can help break it down using a 5-minute chart or a 1-minute chart. And here you've got that liquidating volume, right? You see that on the 5-minute, it liquidates, right? People are buying here. Now they get trapped. Now, when you take that low there, right? When we take that low at 19,579, boom, right? You get more selling, right? Because those people are using that as a stop. Then you come down to that level. You see there's not much volume there, right? Let it sell off, right? There you could take a look below and fail, but it's not going to work. So let it sell off. You've got all that trapped long inventory selling out. Now you sell it down, boom. Now there, right, you have the perfect fail to look below, right? There's your level, 19,342. It actually hits it pretty much to the tick and lifts. So if you're a fast trader, you can put your buy order here, right? Let's take a look at that. So if you're a fast trader on a 5-minute, you put your buy order here, you use that as your stop, right? And then your target is 19,413. That is not a bad run, right? So you see that the liquidating volume's done. Now, the second trade, so say you missed that trade, right? That's all well and good. We're going to come back and we're going to retest 19,342 because we hit sellers, right? So the sellers step in, they step in, they step in. Sorry, here are the sellers, excuse me, right? We move up, right, off the level. The sellers come in here. And then as soon as they sell down, we look below 19,342, and the next candle can't take out that level. There's your signal, right? So you're long. This is your danger level, and you can use this as a hard stop. So if you have a smaller account, you can use the level as your stop. Or if you have a larger account, you can use the level as your danger zone and the bottom of that candle as your hard stop. Right now, as you've taken that long, you're looking for the middle and then the top of balance. Now, obviously, there's a seller. There's sellers here, right? Because we can't break up until we have to clean out more volume. So once we get to this area, if you put some offers out and they're not getting taken up here, just sell out, right? Nothing wrong with that. That's a beautiful trade. So if you're long 19,360 and you're out 19,440, that's a well, it's a well-oiled machine. Simplicity is what we're looking for in trading, folks. Okay. And for you larger traders, right, if you're building a position under 19,413, you can see that that little dip comes in, right? Buyers come in, right? Buyers come in because shorts are trapped now down here because they're waiting because they missed it and they start shorting here. It happens all the time, right? As soon as they realize they're trapped, we start coming back over these levels. So this is how you can use a simple candle chart, a little bit of volume profile to show you what's going on in the business. That's what the chart's supposed to do. It's supposed to show you what's going on here on a half hour time frame in the business, and the other chart's a 5 minute time frame. So what's going on every 5 minutes? What's going on every half hour? Right? The chart is just there to show you the distribution of inventory and then the accumulation of inventory when markets go on sale. Remember, it's a market. That's why we call it the stock market, the futures market. It's not the stock hot tub. Okay, it's a market. Don't ever forget it's a market. Use some common sense. We can use really, really decent risk management because the NQ is a difficult market to trade. It's thinly traded. So we can use the levels for entry, but also for risk management, right? And we can also use this method of trading. It's scalable. You can start scalping on a 1 minute, and then as you build your skill, you can build up your the time you hold trades and the scale of the trade. So this method of trading based on the business is scalable in time and size. So literally you can do this on a daily chart as well. Anyway, that's enough for now. Come visit us at microefutures.com. If you are tired of getting blown up accounts, if you're tired of not passing evaluations, if you're tired of getting frustrated and letting your emotions rule you, you're emotional because you don't understand the business. Come, we'll teach you the business. We got a 7-day free trial. We're also starting our one-on-one coaching class starting in a couple of weeks where I coach you for life and you get all our classes and you take them over and over again. You pay a one-time fee and that's it. You got me for life. You need me, you just call me. You all get my phone number and we work together for as long as it takes to get you profitable. I'm JJ. Have a wonderful long weekend. Come visit us at microefutures.com. We got a great room of traders. There's something for everyone. We have NQ traders, oil traders. I focus on ES, but I love analyzing other markets and helping people be profitable. So thanks very much, folks. We will see you soon. Bye for now. Have a wonderful long weekend.